Hey guys, I'm Chris, also known as Token2049. I'm an angel investor advisor, and I've also been in the crypto since for the past 10 years, making YouTube tutorial videos. I've actually made multiple videos about the protocol here: BounceBit, Solv, My Network, StakeStone, before they were called StakeStone, and then Buffer. So it's great to be here to talk about each project. And I thought, before we start the panel, we could get each of the panelists to do a quick intro about their own project. We'll start from Amir.
Yeah, so I guess I just introduced Buffer to all of you, so you have a first time. But yes, we did actually start. Maybe one thing that I didn't say is we started by looking at a lot of privacy preserving compute sector initially before we started actually developing more of a base stack. So yeah, that's how Buffer started and how we got to what you guys just saw.
Hi everyone, I'm Ivan, CMO StakeStone. So StakeStone is actually a liquidity asset protocol. We are actually omni-chain. We're built on layer 0. We're able to integrate any chains and protocols. And I think we're backed by Panelists Labs and OKX Ventures, and I think that we are going to invest. We're going to announce our investment round soon, and also our Stone BDC product. So look forward to that. Thank you.
Sounds good. Firstly, I have to say thanks everyone for coming. I've been on quite a few panels this week, and I think today's turnout really very impressive. So thanks everyone for being here today. My name is Jing. I'm part of the team at Solv. What we are building is largely in the Bitcoin ecosystem, trying to deliver use and generate returns by Bitcoin. So here we have a Bitcoin abstraction layer.
Thank you everyone, and thanks for My Network for the invitation. I'm Joe, the head of the Asian markets for BounceBit. So we are quite similar with Solv and StakeStone, and we are also providing a new pieces into the Bitcoin ecosystem to provide a simplified yield for the BTC and USDT, and that's what we do. Yeah.
Awesome. I guess before we talk about FHE and get a bit more technical, we could start with liquid staking and restaking, which each of these projects has done. And what do you guys, obviously early this year, staking and restaking has been the hot topic. Accumulate the fastest and the most TVO in the entire DeFi history. What do you think contribute to that, and what could the future be like?
I think simply put, a lot of people always are looking for opportunity to get more yield or APR, actually putting their money into work. We're creating this new financial paradigm, which is called blockchain. It's still early in my opinion. There hasn't been much opportunities to actually take advantage of lower risk APR, lower risk yield, and with the introduction of restaking, actually being able to reinvest your money in other protocols to actually secure them in terms of slashing protection, or I always call it SLAs, Web2 SLAs essentially. It provided an opportunity, a window of opportunity for everyone to opt into it, and everybody was excited about it, and that's why it really triggered the growth. Now, restaking itself also provides many new opportunities for new applications and new ways of working on blockchain. That's where it makes sense for both sides of the demand side, which is the developer side, and also the yield side, that really triggered this growth.
And Ivan?
Yeah, so I think I've been on panel with Mr. Block, Amir before quite a few times, and and also the other panelists here. So I think DeFi is something that it's quite, I would say, it kind of evolved in this last 1 or 2 years. I think earlier in the days, people were just thinking about what the BTC price is, what the ETH price is. But now that most of the people are already holding such assets, they are looking at DeFi and looking into restaking. So for example, what we offer here at StakeStone is basically when you hold Stone, you're actually earning a basket of rewards, right? Whether you can bridge to an L2 protocol to earn its rewards, and you will still get to earn eigenlayer points and symbiotic 5 points. So basically, we are a one-stop shop. And also, I think what Buffer and what Solv and BounceBit are doing, we offer similar but different products to cater to the different group out there. And also because crypto adoption is still so low, and I think the pie is so much bigger than just the panelists here. Thank you.
I think you brought up a very good point. And if we rewind back, I mean, restaking as a concept really took off nearly the last 1 year or so, right? A lot of it started in a bear market where returns were pretty much non-existent. So every little bit that you can juice up your returns, I think that's really what helps adoption at that pace. So I think number one, timing definitely helps a lot. And number two, as you start to progress into late last year and early this year, you increasingly see how users want to have, what's the word I'm looking for? You want to be able to use your holdings, your tokens, your asset in as many ways as possible, right? Whether is it generating a base yield, taking this asset in many times it's a bearing asset into various DeFi protocols and DeFi places to stack it and to return and to get additional returns. I think that's how a typical user in this ecosystem really thinks about that. And I think that's why it really contributed to the growth we've seen over the last 1 year or so.
Like, how many of you have heard, like, don't put all your eggs into one basket, right? I believe most of you have heard it. So for us, like, very simple. Like, you do have your own way of trading strategies, like higher risk part, but they're so recommended to have some portion to put on the safer side to make sure that this amount of the money still grows into the daily basis that it covers your whether it's expenses or it can bear the different market movements so that you have a stable yield at the end of time and eventually make a break even or even more from the end of the day so that you don't incur any losses. So what we are doing here is really to put people have a more peace of mind and those people who believe in Bitcoin that maybe have another bull run that the price went up to 100K, like what all the traders, the Citibank and all the bank has predicted at the end of this year. And then while waiting, and in some yields, without any trading risks is one part of the challenge we're trying to solve here. And we're trying to bring people have more choices of having different products with different yield products in BTC and USDT. And we also have a different meme coin launchpad and the ecosystem that actually helps people to have more tools into one platform and have more yields. Yeah.
All right, thank you. I think one of the key words that a lot of the panelists and founders are saying is yields, right? Mainly because users like to make money. They are attracted by the yield, by the points. Like, who here like to make money? Anyone? No one likes to make money? Put your heads up, right? So we're here because of that, right? But at the same time, we're here because of blockchain, because of decentralization. My next question to the panelists is, how are you as a staking protocol, restaking protocol, tackling that problem, right? Because there are a couple of options. You could directly run the validator. That's pretty much one of the most decentralized way of doing it. But now there are staking services, Lido, and now there are restaking services. And each, essentially, from phase one, which is yield, like everyone's mentioning, the yield, the points, but then we have to tackle that problem is, how do we make it more decentralized? We'll start with Amir.
Yeah, I believe, maybe I'll start by decentralization, because I feel like a lot of people think it's just a meme. But decentralization actually means de-risking, and it also means improved UX. The one item that I didn't really unpack in the panel about like MEV cartels and other things is like, if one centralized operator, centralized entity, or even a liquid staking or restaking protocol takes a hold of many validators on Ethereum and break, let's say, 30-50% barrier, they can really hold the chain hostage to actually like build the MEV to their own like taste, which is really bad. It becomes centralized. It reintroduces the risk that even having the today's financial market and defeats the purpose of what you're building. So that's one side of things. That's the danger about like these liquid restaking and staking protocols growing too big. Another risk is like having centralized entities running it. You've seen on the regulatory landscape or any other even let's set aside regulatory landscape. Let's say you're ended up in a world that everybody accepts blockchain and centralized institutions. But it's still a risk that even a rogue admin can destroy an entire set of validators or do anything malicious. That's why another risk of centralization issue here. But ultimately, this improved UX should be always decentralized, how it was meant to be on Ethereum itself. That's where the way that we designed the protocol to actually get away from these risks that blockchain was supposed to get away from is building buffer with the values that Ethereum was built. Permissionless participation. We created this trustless mechanism between a staker and a node operator, that even if a node operator tries to do the worst case sort of the malicious things, there's enough incentive for them to not wanting to do that. They essentially get slashed out of their own economic incentive inside of this part. That's where we have bonded validators. That's where we created this sort of anti-slashing mechanisms. It creates more protections against actually slashing users' funds. Ultimately, creating a decentralized network is a de-risk factor for everybody that is on top of this blockchain and wants to trust to use this blockchain. There further grows to even other things like L2s, like centralized sequencers are super risky. Now going back to the reality, we know regulatory landscape is super against crypto. At any point in given time, if somebody knocks on the door of one of these centralized operators, they can just take over the operation, take down the whole thing, and the funds from the users and everything can be under risk. That's why we believe that's how we participate, that's how we contribute. Any extension of this stack that we created actually takes in this main value into consideration in our growth.
Ivan? Yeah, so for us, we are actually non-custodial. So any of your ETH that actually put to StakeStone is actually held by custody. And then we would issue Stone back to you, which is a liquid yield-bearing asset, where you are able to redeem it at different chains, different protocols. You don't have to come back to StakeStone's website or our own protocol to redeem Stone. You are able to redeem your Stone back to ETH at anywhere you would like, as long as there's liquidity to it. So we have a strong liquidity partner called Native. So they are actually our AMM, where they actually help to make sure that when you want to unstake your Stone back to ETH, the slippage fee is as low as possible. So, for example, I think a month ago on one of the Mondays, there was a huge drop in all the prices of all the altcoins, of BTC as well. A lot of people were withdrawing their Stone back to ETH, and I think the slippage was at its minimum compared to many other protocols out there, where people are just trying to get back their liquidity to do other stuff that they need as well. So I think this is something that what is the value of Stone, and how we are looking at the whole protocol, and how our core value is to actually have zero lockups for any of our users' fund.
Thank you. Jing?
So we touched on a few topics over here, right? And I think one thing that Mr. Block mentioned at the start of the year, where they come from, is solving. If we look at crypto and we look at the ecosystem, I think the source of view mainly comes from two places, right? Number one, it's token emissions from various protocols and various chains, and number two is trading fees. Right? Token emissions is something that is probably easier to control, but it's less sustainable. Trading fees is probably one of the main things that power our entire ecosystem. And if there's a way to if there's a way to make it such as a sustainable use case, the trading fees will be there, and over time, that's how this whole ecosystem can potentially be a lot more sustainable. So, in longer term, a lot of the yield that whether we're deploying to, whether we're staking to, or even staking to, can come from an entire broad range. Right? I think staking is one of them, but as you start to expand, as you start to grow, I would think that the trading fee should be funding a lot more going there. And then the second topic that a lot of the panelists mentioned is about safety and security. Right? I think we primarily build within the Bitcoin ecosystem. I think the thought process is a little bit different in the sense that the reality is Bitcoin is a sum of multiple trust assumptions, regardless of who you use, regardless of which custodian you use, regardless of which wrapper you use. And I think at the end of the day, it's about building a product that is trusted, building a product that is safe, building a product that users are willing to hold for the long term.
Thank you, Jing. Then I have a question for you. I take over your job. So, if I tell you I can make an APY about 5% of the yield, like you just know me, then I ask to take your money, your BTC, will you give it to me?
I think for a typical Bitcoin user, coming from a place where the yield is zero, I think any substantial pickup, you'll start to get people interested. But it also depends on which kind of Bitcoin user you're talking to.
Okay. So, but anyone likes to just, if someone approach you, like they tell you their project, but you have not read or research about it, and then they ask for your Bitcoin, will you actually give your money to them like trust? No, right? Exactly. So what we do here is we not try to get your trust. What we do is we bring other people, like Ivan. Like I bring him into the picture, say, Ivan will not only be, I will not be only taking your money, he will also be inside to taking one part of the keys. So let's say, if any one of us want to, run or do something bad, you can't because you don't have the power. It has been distributed among all of us, and more people be inside this picture is the holding the keys, and then it must have a majority to take the money out. So this is one part how the BounceBit actually solves the security and the trust issues here. The next thing is we also issuing the token of the one that proves that if you have $1 that stick with us, we also issue $1 of the token in BounceBit's network to prove that you have staked that amount with us, so that next time you can redeem back your original money by burning the token that we issued to you. And then you can also use that token issued to mine different network to earn additional yield. That's how the whole roadmap is working, and that's how we actually slowly gain trust and gain people to have a reliability on us and think that we are trustworthy. Because at the end of the day, they get the money back, they see the money growing without worry of any party will steal your money, because we are not only one holding it. We have different teams, different partners, banks, custody solutions, centralized exchanges, all involved to look after your assets. Yeah.
Permission from Chris to make this spicy. I know everybody's sleepy. So you're saying you have a multi-sig and a liquid staking receipt?
Yeah.
Okay.
You're right.
Okay. So today's conference is the FHECon, right? So let's go to FHE and then say how FHE meets AI, and then now we're going to talk about how FHE meets staking and restaking. I think FHE was first taught back in 2009 by, I think, a Stanford professor, Craig Gentry. And then, so I guess each of the panelists could explain it a little bit, like, how is your protocol using FHE and how does it help it?
Yeah, so I'm really excited to see FHE finally getting to fruition and getting to a point, because it's one of the most complicated ways of doing verifiable and privacy preserving compute. Initially it was started that, hey, if you encrypt, let's say you're doing 2 + 2, but you have to do it on an encrypted set of arbitrary computations. That seemed like such a challenge that many papers tried to resolve for. That's why I'm very excited. I'm really following up on seeing how this is going to evolve to solve the issue of the privacy. I know a lot of people come out with pitchforks from the MPC side of things, or even zero knowledge side of things, saying that FHE is too complicated. It actually jumbles up the data a little too much. But I do want to see new research coming out and actually tackling these issues. So there are 2 things I want to probably to cover. One is around the regulatory side, and then one around the AI side of things. I know a lot of people think privacy is dead right now, but I believe you're going through the same thing that Web2 gone through around privacy right now. People were just kind of getting to courts, getting jailed for not doing privacy for Web2. That's where we got all the TLS encryption and all the other things that we have today, all the luxuries we have today. Same for financial paradigm. Majority of the institutions in America are all doing private transactions and using dark pools on sort of Web2 and other things. Eventually, if you're redefining the future of finance, privacy is going to take hold again. So I'm still excited that teams that are fighting the good fight out there and trying to adopt this sort of privacy. Now, sure, there's different types. It's either going to be hardware, trusted hardware based, TEs. It's going to be FHE, MPC, even zero knowledge. But I'm overall excited that there is attention to it. There's research and effort going to it to make it happen. what makes it really valuable for AI, in general, verifiable compute and like privacy preserving compute is much needed in AI today. We're opening ChatGPT and sort of like, we're just trusting a model and hoping the model is actually fitting on like the standards that we have predefined and using it. None of the today's AI models are audited. None of them are actually have a lot of transparency how they train their data, where it's going. If we use FHE or verifiable computation, we can actually have a verifiable format that, okay, the model that I'm using is being audited, it has been transparent, people have seen it, they know that the weights are not biased, which I think are going to create a lot of social problems in the future. Just imagine, let's say if you're getting a loan and an AI is deciding if you're getting a loan. What if the loan is trained on bias, saying like, oh, certain races shouldn't get loans or certain genders shouldn't get loans, but there is no visibility into these things. That's where we really need verifiable computation. And of course, on the privacy side, you don't want to always give up your data. I think our data is one of the most valuable assets we hold, especially for a future that's going to be like an AI dominant future. And we should have control over what we're disclosing. That's where like end-to-end encryption, privacy preserving, zero knowledge all of these are gonna actually like be very like exciting, and we need them. That's where AI, intersection of AI and blockchain makes the most sense, in my opinion, right there and then.
Do you think in the near future we'll see FHE integrated into Ethereum?
Yeah, I would love to see that. I know it's a very challenging task, but I would love to like see some form of a privacy being enshrined into Ethereum. The same way I want to see a lot of things being enshrined into Ethereum, because we need privacy one way or another.
Right, Ivan?
Yeah, so StakeStone is actually right in the middle between the application layer, where it's not like DeFi, GameFi, taxes, GameFi, SocialFi, and also we also provide liquidity to the consensus layer, where FHE is and where my network is. So we actually have an upcoming campaign with Mine Network to provide them liquid TVL, so that they are able to do more stuff in FHE and also in my network as well. So this is an upcoming campaign that will be launched soon, and we are hoping to drive more Stone and more use cases into FHE and into my network as well.
So I think it's a pretty good topic that we brought up today, because what we're really trying to drive here is a use case for this broader entire ecosystem, how you expand it beyond what we are doing right now. At the end of the day, FHE, I think one of the main things that resonates a lot with me is privacy. I know privacy, you talked about it quite a bit just now, and especially within crypto, it's probably something that's a little bit frowned upon right now, but privacy can be used in many, many examples. Let me give you an example. If you're running a piece of research on healthcare data, you probably don't want to expose who the underlying users are, but you want to be able to run their data in an encrypted or anonymous way. So there are many, many things that FHE can actually do, not just within crypto, but beyond crypto. And how I see us in restaking and stuff, really we are providing the engine, we are providing the underliers, we are providing the base to actually help a lot of these things move on. I think one of the greatest challenges FHE actually faces right now is computation costs. It's about it being very inefficient. There's definitely a lot of strides over the last decade or even over the last 1 year on improvements you can do within the space. How you can actually fine tune it, and then we're definitely looking forward to see how a lot of this research can actually bring it forward. Why I'm really excited is because again, it's not just crypto, it's how do we increase adoption. At the end of the day, that's what we're all building for. We're not looking to just do stuff within this blockchain, we're looking to do stuff beyond everything else.
Thank you. So for us, I think guys already covered many of the point that I want to cover. But I just want to share one thing. Actually, cookies and browsing history, everything this has been actually our daily life. Every single traces using what time you use it and all this is marked into all the internet nowadays. It has changed to a new era for that. And there's the pros and cons, of course. With more data available, that that people can do more on recommendation. They know your habit, they know your preference, they can post or stream the video the type that you may like, right? You know, and there's also ways to push different news or articles to you that interest you. But there's also a risk that all your privacy, your habit have been revealed, that people can sell it for money. And this is something that I think is very dangerous, especially in the Web3 ecosystem, that people know your trading habit, people know how much you have, and they know what time you usually to trade. Either you are favor of the meme coin or you're favor of a certain coin, then there can be a way to counter mark or counter trade you to mark you down and do that. So with the privacy and the FHE and all that, I think this can be really prevented, and it's a way of also has a certain leverage on the still show what you may like while keeps you private and secret. Yeah.
All right, our time is almost up, so I have one more question, and then you know, I somehow feel like ZK, FHE, or TE are many times kind of like a buzzword in crypto. Like multiple non-crypto fields has been devoting tons of resources into them, researching it, trying to figure out how to apply them, especially in encryption, preserving privacy, and so on. And are each, I guess, you know, any of protocol today planning to use either three of these buzzwords in your protocol?
Yes, so actually initially we, before we started Popper as sort of like researchers, we ran an end-to-end encrypted facial recognition out of a TE. If I want to like classify how hard it is to build on these classes that you mentioned, probably the easiest one on like end-to-end encryption and privacy preserving would be the TE. That's like the lowest hanging fruit because it's already very similar to the similar formats that have been compute on typical CPUs. That's what we did. Today in Popper, we use them as anti-slashers. Like you can think of them as like a secure hardware module, like a ledger. They can only produce signatures out of your ledger because the key is burned into a hardware. That's how we're using it in Popper. In Unify stack, we're using them as a prover stack. We have a multi-prover stack that takes advantage of TEs. The reason like that there is a pushback on the TE side of things is especially the trust to the hardware manufacturer. And the worry about that is like, sure, like the hardware manufacturer can sort of like have some backdoor, aka Intel or AMD can kind of come in and screw you over. Of course, like we're not there yet. Even our market cap doesn't hate those guys' market cap in terms of like having to risk that much to really screw with people. But yeah, we're crypto people, we're dreamers. We want to build something that is super like runs by itself, and it's not trusted on a hardware. That's where we started moving. I know like networks also started like a secret as having more source of trust and shared state across TEs as well, even though like there were some drawbacks in the architecture itself. But moving forward, we wanted to go to a direction that we get away from trust on hardware manufacturers to trusting math, to trusting probabilistic math that cannot be broken. That's where we entered into the realm of ZK was a little before the FHE. Then we had MPC, which is multi-party computation. And of course, FHE is a little more complicated one that we also came across that solves a lot of problems. What excites me is like FHE is just taking off. I've seen probably so far only 2 projects that are dedicating time to actually developing on FHE. I think that's definitely one of the harder problems to solve. I know some platforms actually try to do MPC that were also having a hard time. Same for ZK. Like was mentioned on the panel here, there's some things around these that, for example, some of them have computation overhead, memory usage overhead that requires hardwares that are not able to be on blockchain. You know, blockchain is about consensus. It's kind of slow. It's hard to meet a decentralized standard while you're doing a compute-heavy task. you much rather have 35 GPUs sitting in the back of your house doing one task rather than me coordinating with Chris, okay, I'm doing some computation, please you do some computation, let's come to an agreement in the end. That's why doing decentralized things are like always tend to be slower. That's why it has been a little slower to adopt these new technologies. But yeah, I'm more bullish on math than I'm bullish on trusting on hardware, of course. But we took the practicality path in terms of like, until we get to these like math and overhead and algorithms improve, we're gonna just use these hardware modules because this enables us to do a lot of things that can push the industry forward. And yeah, ultimately I feel like one of these are gonna come up with a clever way of improving algorithms or other things that it can really push the state of the industry forward.
Thank you. Ivan, how's StakeStone using any of these tech?
I'm gonna talk in a non-tech manner. No, I'm not well versed in tech, but I think like you know the key buzzwords that you mentioned earlier actually has to really come from the I would think it's like the Web 2.5 space first, because they actually has the largest set of data when it comes to like doing AI stuff and all that. And with that maturing, and then I think most of the tech could actually, or the data sets can actually be used in the Web3 version of what everyone here is doing. So StakeStone is actually well positioned to adapt like different consensus mechanisms, including AI, FHE, or any other consensus mechanism out there. So we are just at the forefront of, before it takes off, we are ready to pour the liquidity in from StakeStone.
And Jing, how's Solv using any of the encryption tech?
Sure. So I think there are a few things that we brought up here. So firstly, you brought up trusted hardware. I think trusted hardware, the reality is 99.9% of us actually do that. Why? It's because it's a combination of computational power versus efficiency, like cost versus achieving what you actually want. And as for it's something that we use, but we don't really have choices like everyone else. We are all making strides towards using more of like a privacy kind of solution, whether it's FHE related or DK related, but there are definitely a lot of challenges over there. And as we go down the road, whether we do it in terms of a modular kind of implementation or whether in terms of a parallel design kind of implementation, I think these are things that we are actively looking at, we'll be trying. There are definitely a lot of bottlenecks, largely because of computation costs. A lot of times when we operate on the Bitcoin layer, cost by itself is really high. Introducing a lot of these additional layers makes it non-feasible and non-economical. So at a certain point of time, it's a decision we have to make, and it's something we're trying to define all the time.
What do you think the user care more, the yields or decentralization privacy?
So, I mean, if I'm going to be honest with it, it's a risk-reward kind of thing. If the centralization is going to wipe everything out, then we are all aware what's going to happen. People are just going to sit there and do nothing. It's kind of no point doing it. So it's almost a risk-reward kind of what you're willing to sacrifice. I think most users in this space right now are probably finding that yield is probably more important than privacy, or more important is decentralization to a certain point. Hopefully it's something that we can refine over time, but I think that's what we see right now.
Yeah, I mean, like one thing is that I've been in this industry for so long, right? And I feel like one of the biggest leap in crypto was during the DeFi summer, where people were like trying to explore new tech. There was a time where people would go to Yearn, trying to figure out how to go balancer, try to go snapshot, and then trying to create these, rebase coin, for example, right? And it seems like for the past, I mean, at least this year, it seems like people are no longer willing to put time into these innovations to push blockchain forward. And I somewhat want to blame the exchange as well. The exchange are listing tokens that are mainly meme related, focusing on trying to increase the user count. But then again, we're in an industry that's so much relying on the exchanges, right? And then I'm just hoping to use this time to also, explain that exchange should be kind of supporting, projects that are putting their time into the new tech and try to essentially implement tech, and so that user would not only be just focusing on the yields and the next dog coin, whatever it's going to call, you know, dog this, dog that, dog this, but then can actually be respected outside of crypto. Like, fuck, man, I mean, most of the people are looking at us listing dog coin. But yeah, the last question to Joe about BounceBit as well. Is BounceBit planning to use any of the encryption tech?
Yeah, we have worked with my network. So that's one way start. And for other encryption, as I think we are still working on it. Yeah, we're definitely looking after for people's privacy and trying to keep. This is part of the DeFi protocols as well.
All right, awesome.
Yeah. So for also on top of the question on the recent, I think you brought a very good point about the finance and all the other exchanges actually listing different meme coins and all that. I think I totally agree with you, but to me it's more like a market-driven behavior because there are still a huge like reward for them seeing after I list this meme coin, I do see a huge growth in trading volume. I do see huge growth of the user. Then this actually encourage them to continue doing that. It's like it happens in normal as well. Like if you're doing something, everyone knows it's a very bad behavior. It's not good for the ecosystem. Like you are making all the shitty coins to chasing out all the good projects who are focusing on the hard work and spending their time and effort building that project, and in the end, all the attention has been drawn down to the meme coins. But as long as the market still behaves like that way, and they like this behavior, and those exchanges are rewarded by that, I think this will be a hard way to stop more change.
I mean, if we look at the exchange like a social app, yeah, it makes sense, right? Year over year, they want to create more user. But if we see, you know, exchange as pioneer to push the industry forward, then, you know, obviously they could list meme coin, but they should also, you know, spend time and resources and to guide the community and the retail. That's, you know, that's similar to how I think in centralized like NASDAQ or New York Stock Exchange work, right? Not only they list, you know, company, but also they kind of see what type of company they are leading the industry forward, right? So for me, you know, looking at exchange, I believe that, you know, it shouldn't just be market driven, but to also guide and allows project, or else everyone's just going to focus on creating meme coin.
Yeah, I think it's about short-term commitments versus long-term commitments. If you want to like focus on short-term, yeah, meme coin is good. But I think one of the things that is keeping back all these massive enterprises that have like sort of funds, like they move like, I don't know if you guys are familiar with Repo, but it's like kind of a network between JP Morgans and like big banks. They move trillions per day, which is above the market cap of all we're sitting here for, right? One of the reasons they're not entering the chat here is because we lack privacy and certain guarantees. Yes, if the exchange doesn't support this future tech, these guys never come in, and the exchange would get to scale on this little around meme coin. So I agree with you on this sort of like discussion.
Yeah, awesome. Thank you guys. I mean, learned a lot. Every one of you would like to learn more about Puffer, Solv, BounceBit, and StakeStone. I keep remembering the old name.
What's the old name?
I can't.
No, that's okay.
All right, thank you guys so much, and thank you guys.
Thank you.